Chapter 11, Current Liabilities and Payroll Accounting. Payroll can be stated in terms of salaries, which are usually a monthly or yearly rate, and normally associated with management, administration, or sales employees. Wages, on the other hand, are paid on an hourly rate and are usually paid to non-management positions such as store clerks. Three amounts are determined when calculating payroll: gross or entire earnings, payroll deductions for amounts taken out of the paycheck, and net pay, which is take-home pay calculated as gross earnings minus payroll deductions. Gross earnings represent total compensation earned by employees. This illustration shows gross earnings for an employee who has worked 44 hours in 1 week. The first 40 hours are paid at an hourly rate of $12 per hour, resulting in gross earnings of $480. The 4 hours of overtime are paid at a rate of time and a half, or $18 per hour, resulting in $72 of gross wages. Total wages related to the 44 hours of work are $552. Payroll deductions can be categorized as either mandatory or voluntary. Mandatory deductions include FICA, Federal Insurance Contribution Act tax for Social Security and Medicare funding, federal income tax, and state income tax. Not all states have an income tax. Voluntary deductions can include charity, such as United Way, retirement accounts, including 401k and 403b plans, union dues, the employee's portion of health and life insurance, and pension plans. Net pay is calculated as gross earnings minus payroll deductions. Gross earnings from the previous slide are $552. For this class, FICA will be calculated as 8% of gross pay. 8% of $552 is $44.16. Federal income taxes vary depending on the status of married versus single, as well as number of allowances that the employees select when completing their W-4 upon being hired. This employee's federal income taxes withheld are $49. Totaling FICA taxes, federal income taxes, state income taxes, United Way, and union dues results in total withholdings of $119.20. The employee's net pay is $432.80. This payroll register summarizes and presents payroll data for the week ending January 14, 2010. Employee names and the related earnings broken down by regular and overtime are shown. The report classifies the employee information as either office salaries, which total $5,200, or wages, which total $12,010, for gross earnings of $17,210. The next portion of the payroll register contains deductions. Deductions are comprised of FICA, federal income tax, state income tax, United Way, and union dues. Total deductions related to office salaries are $1,730. Total deductions for wages are $4,017.50. Total employee withholdings for the pay period are $5,747.50. The next section of the payroll register indicates net pay and the check numbers for the paychecks. Total net pay is $11,460.50, which represents total take-home pay. The last section shows information that will be recorded in the journal entry to record the payroll. The expense accounts that will be debited are office salaries expense for $5,200 and wages expense for $12,010. The journal entry recorded for the January 14th payroll register on the last slide include the debits to the two expense accounts, office salaries expense for $5,200 and wages expense for $12,010. The company cannot keep the amounts withheld from the employees' paychecks. Therefore, the related liabilities are recorded for FICA tax payable of $1,376.80, federal income tax payable of $34.90, state income tax payable of $344.20, United Way payable of $421.50, and union dues payable of $115. The amount owed to the employees is recorded into the salaries and wages payable for the net pay of $11,462.50. Note how the credits in the journal entries reflect the increase in the liabilities to the federal government and other agencies, as well as the amount owed to the employees for their work provided. All of these accounts are liabilities, whose account titles include the word payable. There is usually a time lag between when the pay period ends and the employees get paid. The journal entry to record the payment of the payroll to the employees is a decrease or debit to the salaries and wages payable amount and a decrease or credit to the cash. In addition to employees having amounts withheld from their paychecks, the company or employer is responsible for payroll taxes. These taxes are FICA tax that in 2011 was 7.65% on the first $106,800 earnings per employee. In addition to FICA tax, employers also pay unemployment taxes at both the federal and state level. These unemployment taxes are paid on the first $7,000 of earnings per employee. After employees have passed the $7,000 gross earnings amount, the employer will not have to pay any more unemployment taxes on these employees' wages until the next calendar year. The federal unemployment tax rate is usually 0.8%, which is less than 1%. So you will multiply the earnings by 0.008 to calculate federal unemployment tax amounts. The state unemployment tax rate is usually 5.4%. To illustrate, assume all of the $17,210 of gross wages are subject to unemployment taxes. This is to be expected because it would be unusual for an employee to have already earned more than $7,000 as of January 14. The journal entry to record employer payroll taxes includes a debit to payroll tax expense. The amount can be left blank until FICA, state unemployment, and federal unemployment are calculated. The increase or credit to FICA tax payable is $1,376.80, calculated by multiplying gross earnings of $17,210 by the tax rate of 8%. State unemployment tax payable is increased or credited for $929.34, calculated by multiplying gross earnings by the state tax rate of 5.4%. Federal unemployment tax payable of $137.68 is calculated by multiplying gross earnings by 0.8%.